Good morning, everybody. It's Tuesday morning, bright and early in New York City, and we're here for T3 Live. This market, we're smack down towards the end of June, get into July 4th. It's slowing down. We could see what we saw yesterday. We obviously had a down day yesterday. It was a gap down, went a little lower. Not a whole lot happened. There was not a manic sell-off. It wasn't pressure. It was very orderly. And then we rallied a little bit towards the end of the day. That being said, there's times and places where I'm all in, very aggressive, and there's times and places where I'm just really sitting on the sideline and letting the trade come to me and waiting for something to happen. I'm in the latter at this point in time. I'm waiting for a trade to come to me. I'm looking at my charts, and right now I definitely see some bearish signs in individual plays, some bullish signs in individual plays, but pinpointing a stock price and a target really is coming intraday, but it's not necessarily coming when we walk in the morning. And that's what we're seeing. I know, Evan made a very good trade yesterday in Apple, and he's been sticking with this idea now for 2-3 days and has had good conviction on it and has followed through, and it actually just broke the 21-day, I believe the 21-day and the 10-day moving, 50-day moving average for the first time in a while. And even today when we're gapped up, Apple is not even up. So you might see some more pressure down to 565, 560 possibly. At some point, certainly, I think it's still going to resume its leadership. Not ready yet, or so it seems. Banks not ready yet. They Goldman Sachs is almost at, it's low. It's forming a nice bear flag. JP Morgan's, I think it's going to find its way after, it resumed its, 200-day moving average. I don't see a lot. There's lack of leadership. A lot of the stuff that I was looking at last week, the mid-cap that were looking really good for new leadership, SXCI, MLNX, even Under Armour, they broke out for a day and a half, and they came right back into their bases. And now actually they're testing, some of them are even testing their 21-day moving average. Under Armour got downgraded by 2 firms, and it's below its 50-day moving average after it made a new high up almost at 108. It's back to 97. So that being said means more time is needed, and lower prices certainly could be in the cards. Now, after we do a 50-handle down move, I'm not the guy that's going to be putting on new shorts. I'm going to be going the other way. I'm going to be looking at the 200-day moving average on the spiders, 129.79, and I don't think there's an A-plus trade until we get down there. I think there's going to be some intraday trades, and I know I was talking about the spiders yesterday at my VTF while I was looking at it, while I was buying it, and again, I made 50 cents over 3 hours. It was very slow, it was very muted, and not that exciting. I think that's the same thing we're in store for today, and that's just how it is. You don't have to be all in all the time, and quite frankly, the best traders know when to sit on the bench and know when to really just start swinging and making sure they get on base. And right now, it's sitting on the bench and getting on base selectively. A few ideas that I'm looking at, that I'm massaging. PCYC is going parabolic. At some point, that doesn't end very well. We'll have to wait and see. I'm still looking at, SXCI. It's right at its 21-day moving average. We'll see if it can hold there at this point in time. Not sure it really can. LinkedIn still looks good to me. 102, 103. I will be looking to be a buyer, possibly 100. Zangom long a little bit overnight. Again, looks good on the chart. Maybe it can get to $6.80 to $7, possibly. It's not necessarily a day trade. It's more of a slower mover at this point in time, knowing that it was, $6. And a few selective retailers I'm looking at. I'm still looking at Lulu. Possibly it's either forming a bull flag or a bear flag right now. It sort of looks like a bear flag, but remains to be seen. And Coors, I think, looks pretty good from a retailer point of view. But I think it needs more time, and that's where we're at. We need more time. I'd love to give us 9 A-plus ideas out there, but that's just I just don't see it right now. And I think what's in the cards is you got to be a lot more selective. I see Google formed a nice bear flag, and actually, at this point, it's at the low end of its trading range, the low end of its Bollinger Band, which means it probably goes lower, but you can't short at 560. The next bounce to 570, 572, 575, that's where you look to get involved on the short side. And obviously, if you're looking to get long, there might be a little bit intraday long opportunity, but technically, it's showing that it's really forming a little bit of a longer bear flag. That being said, you know, every day seems to be changing. The S&Ps are, we're getting some bigger travel ranges than we've had in the past, and that's okay. But the intraday trading that we're looking for, and really the patterns that I'm seeing going out even a few days, I'm at a very difficult time trying to really figure out and get some conviction to my ideas. Hence why I'm sitting on the sideline. Hence why I'm going to wait, and understanding that July 4th, is next week, smack down in the middle of the week. It's going to be a slow next week, but stay tuned to us in the VTF, and we'll certainly have some, a few plays, certainly on an intraday basis that we can capitalize on. Good luck today, and be prudent.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.